Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, the Australian dollar's bearish sentiment returned on Tuesday. However, the slide towards the support area seen around 68, 70, 80 soon found momentum. With the bullish divergence kicking in quite aggressively here, we can see that the MACD is rising, along with that with the RSI rising, and the market is actually slowly turning around. Could see further up tests into tonight's session. A break above 69.90 would give further exposure up towards the region of 70.55 and reassess from there. The euro is still holding above this level of 104.80.95 respectively. Still, the momentum is still a little bit mixed, as the US dollar, which measures the greenback strength against a basket of 6 major currencies, briefly posted a high, or around a 20-year high of 104.18, but however has pulled back to around 103.50.60. As many investors monitor comments from many US Federal Reserve official speakers this week, we also get an update of the key April Consumer Price Index, or the CPI, which is expected to show that inflation may have peaked, which could temporarily soothe the global markets if confirmed later today. The US Bureau of Labor Statistics will release the April Consumer Price Index, which is the CPI data, on Wednesday at 10:30 p.m. Sydney time. According to the forecast, the US CPI report is expected to show headlines inflation, that is, rose by 0.2 in April, while the forecast is at 8.1 year over year. That compared with the whopping 1.2 increase in March, or even from year over year was 8.5. Now looking at the technicals, while the market still remains above 104.85.95, could see a retracement up towards 105.70 or 106.30. With that being said, though, if we see a break of 104.85, then that would expose the region down towards 104.40.60 area. The dollar yen is finally breaking down, as we can see the market backing away sharply from that 131 area, is now looking towards the next challenge, which is seen around 129.75. A break there would give further exposure to 129.30. Now a break there would give further risk to 127 and re-establish from that support level, as we may see a rebound. Looking at the technicals, they're looking quite heavy, so it does support this view. With bullish divergence also seen in the pound, I feel the market is preparing for a move up to 123.90, which if cleared would give further indication to 124.70 and reassess from there. With sterling Kiwi, however, the market is getting a little bit weaker above that 195 region, and therefore I do anticipate a pullback, with the immediate target seen around 194.90, and a break there gives us a further downside slide to 193.80.90. And finishing up with gold, well, the market did take out the level of 1,848 and nearly claimed its target of 1,820.26 after posting an intraday low of 1,831, which was last seen back in early February. In light of the pattern, like many challenges, the market break of that 1,848 is just testing that top side, which is now seen around 1,852 to 58, which could see a rejection and see another down test and reassess from 1,820. And rounding up with oil, the market reached its objective, which was around $97 a barrel today. That was a low of 97.15, and now with a slight rebound in play, we could see a challenge up towards the region of 102.30.50 and maybe find a struggle and then eventually see another retest of 97.40.80 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report and I hope you enjoy the rest of the day.